I think from 2010 to 2020, it was clocking about 7% in the US dollar, and all of the currencies that kind of pegged to the dollar, about 7% monetary inflation a year. I think it tripled from March 2020 to March 2021, at least. There's debate. We could debate whether it's 20% or 30%. I mean, the S&P 500 was up 38% year over year from where we're sitting today, but I suppose it tripled. And now if I look out, I can't see any reasonable forecast where it isn't at least double. It isn't 15%. So my forecast is maybe it's not as extremely expansionary as it was from March until today. Not over the last 15 months have been pretty aggressive, but I think it'll continue much more than 7%. So if I had to make a forecast, I would say 15% for the next 4 years. I think inflation is a vector, and so it's not one number, it's not a scalar, and you can't use arithmetic. If you want to be simplistic, you say inflation is CPI or PCE, and it's one number, and we were targeting 2%, and now it's 4 or 5. But that's not the way I think it is. I think it's an n-dimensional vector. So, for example, I think the inflation rate in single-family homes in the U.S. is 25%. I think inflation rate in equity was 38%. The S&P 500 index is up 38%. The cost of buying a share of stock in a company is 38% higher. So if you look at asset inflation, Bitcoin's up 270%, NASDAQ is up 40-something%. There's no inflation in gold, that's flat. Real estate's up 20% or more. You know, you can find a market basket of things called CPI that are only up 5%, and you can say that's transitory. It's irrelevant whether it's transitory or not. If I keep track of a list of things that you don't want to buy and I tell you that the price hasn't gone up, what does it matter whether the price went up or not? The question is, what do you want to buy and what price is it going up? And I think the price is going up at a different rate every month in every different place in the world and every different cohort for 1,000 different products, services, and assets. And, you know, that if you understand that, then the best surrogate for an investor is the monetary inflation rate, and the monetary inflation rate is somewhere between the M2 money supply expansion and the S&P index. Take the S&P index, 38%, it's up, and then subtract 3% risk premium, and you could say there's a 35% risk-free hurdle rate. That was the rate at which the currency devalued, right? The dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So you know, and it was when it was going up 10% a year, it was inflating at 7%. I think the money supply expands at 7%. You tack on a 3% risk premium, that gets you 10%. That's normal. And we're like triple normal, depending upon, you know, what your reference point is. And if you're taking monthly averages or quarterly averages or daily averages. The most important thing for anybody is figure out where you're going to live. And then what is a market basket of scarce, desirable assets inflating at? Because you're going to want desirable, scarce assets in the market where you live. And that is your inflation rate. And that's more akin to an asset inflation rate than it is a CPI or any kind of other inflation rate. You know, I think, look, the Bitcoin mining network is the security network for Bitcoin. And the way we get security is we plug in a SHA-256 mining rig, an ASIC, into a power source. And before May, half of that security was coming from China. The Chinese exodus is driving a forced decentralization. All that equipment is moving out of China, or at least a lot of it. Some of it will be mothballed. Some of it will be moved out of China. And a lot of it has been taken offline. The result of that is that Bitcoin mining everywhere else in the world is 50% more revenue today than it was 2 weeks ago, dramatically more profitable. It'll get more profitable the next difficulty adjustment. I think that the Bitcoin network is reorganizing, distributing. A lot of people that own Bitcoin in China had to sell it in a hurry. So they had to take a haircut in order to liquidate their Bitcoin and convert back into RMB, and that caused volatility in the market. I think that the Chinese exodus, it's a tragedy for the Bitcoin miners in China and Bitcoin holders in China, right? I feel awful for them. I think it's a mistake for China, the country. They're going to lose $1 trillion. They're giving up. They had half of the mining industry, and an industry that's growing 100% a year, and they gave it up. I think that the result is the Bitcoin network will shift to the West. It's a benefit and a windfall for the rest of the world. It's good for Africa. It's good for South America. It's great for North America. It's an opportunity for progressive miners. It's an opportunity for progressive politicians and political jurisdictions. Texas wants the mining. Why wouldn't you want the mining? This Bitcoin mining is the highest value and use of intermittent or stranded energy of any industry in the world. So if you have a volcano on an island, if you have a waterfall in the middle of Africa, if you have wind power 1,000 miles north of a population center, it's worthless for most other uses. I need a use where I can drop a data center 1,000 miles away from a population center and monetize the intermittent energy with a very narrow pipe, like a satellite uplink. Can you do that with Netflix or Google or AWS? No, you can't, because they need these big fiber optic pipes to stream video. You can't move electricity more than 500 miles on a power line. And if you want to sell electricity to consumers, they're not going to pay more than 10 cents a kilowatt hour. And modern Bitcoin mining rigs will generate about 35 cents a kilowatt hour at the current price. So this is a great industry. It's spreading all over the world. Because it can monetize intermittent stranded power, it tends to go to renewable power and sustainable power. And because it works intermittently, and because it can monetize the entire power source, then that means it goes to all these places where you've got energy to recycle or wasted energy. And so it's a very disruptive, powerful force for the energy industry for good.